Tesla stock has been on a tear lately, and it seems to be headed for big things. Some analysts have said that the company's looking to hit $400 per share this year, but are they right? In this video, we're going to discuss some reasons why Tesla might not hit that target this year, and why the stock might not go as high as many are expecting. Hey everyone, and welcome back to Everything Tesla Stock. Famous electric car company Tesla is facing some major obstacles this year. Inflation is constantly eating away at the value of their stock, and it seems like they won't be able to reach their expected goal of $400 anytime soon. There are a few reasons as to why Tesla might not be able to reach its goal, one of which is the repeated Shanghai shutdowns and struggles. After the 4th of July vacation, Tesla investors had a lot to analyze. A dismal quarter of deliveries, a spectacular month of production, and several weeks worth of disruption at several plants. In March, municipal authorities in Shanghai enforced severe lockdowns on the populace in an effort to stop the pandemic from spreading after a spike in cases during the last quarter. Like many other enterprises, Tesla was forced to shut down production at its Shanghai facility. After 22 days of manufacturing halting, the automaker was finally able to resume operations on April 19th. To help minimize worker movements in the city, Tesla brought back 8,000 people to work in a closed-loop shift, where individuals stayed at the factory and slept there. At the time, Tesla stated it would take time for the company to ramp up production back to pre-lockdown levels due to the 22 days of production that were lost. Before we continue though guys, if you like this type of content, don't forget to hit that like button, subscribe, and ring that bell notification button to stay up to date on everything going on with Tesla. Tesla revealed in April that it was making significant strides and hoped to resume daily production of 2,600 vehicles by May 16th. At the time, we did observe that it seemed like a tall order that would be hard to maintain. For the first 2 weeks of July, the electric car manufacturer halted most of its Model Y assembly line in Shanghai. After that, starting on July 18th, it stopped the Model 3 line for a 20-day period. According to people familiar with the situation, factory upgrades to increase both cars' output were anticipated to be finished by the beginning of August. And Philippe Hochoy, a Jefferies analysis with a buy rating on Tesla shares, said that the relative weakness of the quarter was anticipated. The Shanghai shutdown that lasted for weeks due to the pandemic was the largest damage to Tesla's performance in the previous quarter. With thousands of workers sleeping in the premises to maintain partial production, the corporation went to extreme lengths to restart its factory there and keep it operating. Although Tesla's facilities in Austin, Texas, and the area around Berlin are only just getting started, and its Shanghai factory is the company's most productive plant, Elon Musk still referred to Tesla's new factories as muddy furnaces in his remarks, which the author interpreted as a possible indication that major working capital disruptions may have had an impact on Tesla's free cash flow. He said, "Berlin and Austin are losing billions of dollars right now because there's a lot of expenses and hardly any output." Musk told the Tesla owners of Silicon Valley on May 31st that getting Berlin and Austin functional and bringing Shanghai back to the saddle fully are overwhelmingly Tesla's concern. What does this mean for EV makers like Tesla and its investors? Keep watching to find out. Tesla shares fell by a record 38% in the last 3 months that ended in June, a record quarterly decrease as a result of the Shanghai shutdown and difficulties starting up additional factories. Since the first quarter of 2020, the S&P 500 has dropped by 16%, a record low for the main US stock market. If there is another shutdown at its Shanghai facility, Tesla's stock performance may suffer more this year, which could prevent it from reaching its $400 price target. Also, Tesla's stock fell nearly 9% in June due to concerns about inflation. It is not just a problem for Tesla, it's also a problem for the entire auto industry. The automaker has been increasing its prices since the start of last year, and most of its car models and trim levels have had their prices hiked by $2,000 to $6,000. Elon Musk stated in July that Tesla is waiting for inflation to calm down before lowering the prices of its EVs, which have grown 20 to 30% in the last couple of years. One of the most common criticisms about electric vehicles earlier on was their high price. EV fans argue that the cost will fall with increased volume and as the battery costs improve with new technology. They were correct until 2020, when the pandemic hit and out-of-control inflation crippled the global economy. Tesla's been the best instance of this because of its direct-to-consumer method, which does not rely on vehicle dealerships who agree on the final pricing with consumers. Instead, the prices listed on Tesla's website are the actual prices, and they have been progressively increasing. Musk said that although Tesla wants to make EVs as affordable as possible, it's been very difficult with inflation at a 40 or 50-year high, adding that he thinks the official numbers actually understate the true magnitude of inflation. Musk further said that in some cases, the company is seeing suppliers request 20 to 30% cost increases for parts from last year to the end of this year, and there is still a lot of cost pressure there. The Model Y, for instance, launched at $53,000 in early 2020, and now starts at $66,000. That's a 25% increase in price in less than 2 years, and Tesla's whole vehicle lineup is experiencing the same trend. It is worth noting though that Tesla's prices have risen dramatically in the last 2 years. Its gross margin on cars have also risen significantly, indicating that Tesla's pricing rises have outperformed its price hikes due to inflation and supply chain concerns. Tesla has explained this by stating that due to its order backlog, it was forced to raise pricing based on the cost of vehicles to be built in 6 to 10 months while producing automobiles requested today. The automaker has not been able to accurately forecast those prices. Musk also blames supply chain, production, and inflation challenges for the price increases. During the Q2 2022 results conference call, he stated, "We've raised our prices quite a few times. They're frankly at embarrassing levels, but we've also had a lot of supply chain and production shocks, and we've gotten crazy inflation." The CEO did also remark that it appears that inflation may be slowing down. If that happens, Tesla will be able to stop hiking its prices and may gradually start to lower them again. Musk went on to say that his statements should be interpreted cautiously. "I think inflation will decline towards the end of the year. I'm hopeful, and this is not a promise, but I'm hopeful at some point we can reduce prices a little bit." According to Musk, long-term price increases are unlikely. He did hope that Tesla does not need to increase its prices any further, adding that the current pricing is anticipating what he thinks is the probable growth in costs. And if it does actually materialize, Tesla could have slightly reduced prices. However, in response to growing inflation, global banks have also moved to tighten monetary policy, and this has obviously had ramifications for risk assets, and the price of such assets has dropped significantly this year. This status is unlikely to alter in the near future, and inflation will take time to recover to reasonable levels, thus Tesla may not reach that target price of $400. Now, here's the interesting part. Another reason why Tesla may not hit that target is the highly anticipated Artificial Intelligence Day, and it may not be enough to move the stock out of the current trading range. Tesla's second AI Day has been postponed until September 30th, after CEO Elon Musk said the company might already have a functional prototype of Optimus, the robot presented in August last year during AI Day. However, most people are unaware of the scope of the project and may see the AI Day as a hoax, which is going to prevent Tesla from attracting more investors and reaching that price target. However, Musk did say in April on Tesla's first quarter earnings call that he was surprised that people do not realize the magnitude of the Optimus robot program. According to him, those who are insightful or who listen carefully will understand that it's ultimately going to be worth more than the car business and worth more than FSD. But that said, inevitably, it's not what everyone thinks. Elon's takeover of Twitter is another factor that may have kept Tesla stock from reaching its price target. Although following Tesla's market decline of almost a third this year, Wall Street Journal claimed that Musk is no longer intending to use Tesla shares to finance his $44 billion acquisition of Twitter. A lot is still possible in the deal though, so investors may want to evaluate the stock performance before investing. What are your thoughts on Tesla shares reaching $400 as a price target? Will the Shanghai facility shutdown affect the share prices? Let us know down below. And would you like to know what Tesla's been up to in the last few days? Go ahead and click on this video on your screen. See you there.